What's going on, guys? I've got an awesome video jam-packed with Tesla stock updates and information on how high Tesla is likely to peak in 2021. I mentioned this stock since it was $60 per share post-split and $300 per share before the split on this channel, and it's been on an absolute rampage, and I think if you're ignoring Tesla, you're leaving fat stacks of cash on the table. I can see this stock taking off to a few key levels, and I want to talk about the catalysts that will really move Tesla this year. I've got 800 shares of Tesla as my main portfolio position, as well as in my Patreon Ark portfolio. In this video, I'm also going to talk about a billionaire investor, Seth Klarman, who says Tesla stock has surged seemingly beyond all reason, and I want to discuss why he's actually wrong. So let's not waste any time and discuss exactly what I think Tesla will go to this year in 2021 based on the research that I uncovered, and discuss the controversy of billionaire Klarman and his opinion on Tesla. But first, get your free stocks with Webull in the description below. And if you want to generate income with options like I do with Tesla, then you can get a degree on options trading in just one course in the link below. It's 75 videos and recorded in one easy to follow structured program. All right, so if you watched my last video, we know Oppenheimer analyst Colin Rush more than doubled his price target on the stock to $1,036 from $486. And it's about time Wall Street gets smacked in the face, because they've been dead wrong on Tesla for over a year now. So finally, they know it's not just an automobile company. And to understand where Tesla could peak though, we have to go back a little bit and look at what Kathy's original price target before I give you the current catalyst was, because Kathy was spot on for Tesla. Kathy Wood made a monster call in 2018 that Tesla stock would hit $4,000. Her prediction just came true 2 years early as Tesla passes $800 per share after its split. But what is a reasonable estimate for Tesla stock price in 2021? Well, let's see what Kathy's revised price target was back in 2019, 1 year after her initial prediction.
Let's bring in Ark Invest CEO and founder Kathy Wood. Kathy, welcome. I know 15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
What I love about Kathy is she is a true financier and investor. She weighs 10 different scenarios, including bankruptcy. She also places confidence levels on Tesla's stock price, and she actually thinks about all the different scenarios. And that's what I really like about Kathy's analysis. By the way, I have a free email sign up where I'll send you guys a financial model of Tesla stock with a price target that you can play around with if you want in the link below. So $7,000 is Kathy's price before the split, which is about $1,400 after the split. But this first price target is too low in my opinion. And if you take out the bankruptcy scenario, which I think is almost impossible for a company like Tesla after they built so many assets and their brand, then I actually think the price target for Tesla is about $2,100 and beyond after 2021. The reporter asked Kathy a really great question next, and I think this is going to be really important in coming up with the estimate and giving you guys more color.
So you take out your lowest probability scenarios, you take out the ones that you think aren't going to work, or the highly outlandish ones where everything has to click exactly right. On what bricks is this $7,000 foundation founded? Is it improving margins? Is it lowering the cost of production of the vehicles as they get up to scale, or what?
Yes, there are 3 sources for the increase in our estimate, our estimated price target. One is, as Tesla killers entered the market last year, we expected Tesla's market share to go down from 17% globally, that includes China, to something lower. Instead, it went up to 18%. And the reason it
17% in electric vehicles or in all vehicles?
No, electric vehicles.
Electric vehicles.
This is global. There are many electric vehicle manufacturers in China. Very low quality, but very. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles.
Specifically those 3 things that you saw on the screen, but gross margin, that is a metric that I think will really help Tesla price peak much faster than analysts actually expect. Billionaire investor Seth Klarman warns that stimulus and interest rates are ballooning the market. He took focus to Tesla with his remark, and Klarman highlighted that Tesla has seen its shares rocket more than 850% since the start of last year, and now it commands a market capitalization rate of over $800 billion. And he actually had to say that the company is barely profitable for an automaker stock and has surged, oh my goodness, I can't, automaker stock, it has surged seemingly beyond all reason. So this billionaire thinks that Tesla is still an automaker and they're a pure play on automobiles. He's completely wrong about that. And look guys, he just attacked our moneymaker and he didn't even have any good reason behind his claim. Sure, he did say that interest rates are low, but I mean, check out this 5-year chart. We're currently looking at over 1% on the 10-year treasury. And in July 2016, we were about the same where we are today at just over 1%. So this guy is saying something that is 4 years old, and I don't think he has a very valid statement that goes against Tesla. In fact, Warren Buffett said if the interest rates stay this low, stocks make a lot of sense and are very undervalued. Guys, the like button and subscribe button are also very undervalued. Make sure you join the notification gang, and that's a strong way to keep up with all the latest picks that I have for you. Back to Kathy and what I think is a reasonable price target for Tesla by the end of this year. Kathy Wood has Tesla in 3 of her portfolios. As you guys can see here, I've showed you this before, but they have nearly 10% in Ark K and 11% in Ark Q, and again, nearly 10% in Ark W. And Tesla's the largest position in all 3 of those portfolios. The reason I said before that analysts are slow to realize Tesla's potential, especially with gross margin, is because they can't keep up with Tesla's profitable products in areas outside of the United States. Now, Wall Street analysts don't seem to understand China whatsoever and how Chinese sales are really going to be contributing to Tesla's profit margins. Tesla's new Giga Shanghai produced Model Y has actually 29.4% gross margin, according to Gaussen Securities, who analyzed the cost of building the car compared to its selling price. According to this research firm, which is by the way headquartered in Shenzhen, which is the Silicon Valley of China, that's the firm that's mentioning the Tesla Y cost. They're saying that Tesla's China Model Y only cost $36,800 to produce. However, its selling point gives Tesla a 29.4% gross margin with a price of about $52,600. And due to the current demand for all electric crossovers that just started being produced at the Giga Shanghai, Tesla has plenty of room to keep scaling its operations and improving gross margins. China is an area Tesla is growing in and has extraordinarily good profit margin, guys, and that's something that I'm keeping a lookout for. Tesla's gross margin for Model Y are around 3 times the industry average for a luxury vehicle. Without even spending much money on marketing, Tesla is already a staple for luxury vehicles across the whole world, both in the US and now China. That's Elon's secret and what Wall Street analysts just don't understand about this company. Additionally, Model Y as an SUV is trending and becoming very popular amongst consumers. They like SUVs and the compounded annual growth rate is higher than standard sedan vehicles. That means that the SUV trend is going to further increase Tesla's average vehicle gross margins. The longer term picture is clear for Tesla. Increasing vehicle deliveries, destroying competition, I mean absolutely killing the competition, and secretly growing gross profit margins while Wall Street complains about their low bonuses and doesn't pay enough attention to Tesla. The company will ramp up production towards 1 million vehicle deliveries per year and beyond before 2023, or at least by 2024, while gross margins continue to surprise all analysts and have them clueless. Now, the difference between Tesla doubling or tripling will be China. I said this in the last video, but I love this quote. Right now, it's Tesla's world and everyone else is just paying rent. Now, let me tell you guys, even if Tesla has to split the pie in China, and that's a lot of people's concerns that maybe NIO is going to destroy Tesla in that specific segment, I do think that NIO, Li Auto, and Xpeng, they're gonna do okay. However, this market is so big, it's going to be profitable for a lot of different competitors because there's just so much demand for electric vehicles, and there is some supply coming to the market, but there's just simply not enough supply, and many different vehicle manufacturers can play in the same market. The competition in China has not scared Kathy Wood, or really most investors at that, and that's because we know that Tesla has competitive advantages in both price as well as performance, and their brand is really strong, and not to mention the technology. Aside from, of course, battery as a service that NIO has, which I do think is very interesting, and it's actually giving them a significant advantage because it's not considered a luxury vehicle. If a vehicle has battery as a service in China, they actually get certain subsidies. However, I don't think that's a problem. I still think so many people are in love with the Tesla brand. The EV market is expanding at a rate so fast that multiple players can be profitable even if the competition does catch up to Tesla. So the big question is, will Tesla keep going up? To that, I most likely have to say yes, it most likely will keep going up. Myself and a lot of investors are dollar cost averaging and believe in Tesla for the next 10 years. So there's a bunch of investors that don't even check their stocks like me unless I adjust my option positions because I don't care if Tesla rises or if Tesla falls. Either way, I'm holding long and strong because I'm not concerned with any short-term price movements. I'm not a day trader, I'm a content creator and coach helping people make money with options. And I don't stare at my Tesla position, guys, because I have so much conviction in this play long-term. I'm looking for Tesla to double in 2021, and if it peaks at my top price target, I think it might actually reach $2,100. However, my more conservative base case scenario would be about $1,600, which would be about a double from our current levels. Another reason I hold Tesla is because I have so much long-term conviction. So what I say is what I do. I hold stocks like Plug Power, NIO, Tesla. I hold these stocks for the long term, and I don't day trade them a whole lot because I'm a long-term investor in these names. And with Tesla, I think it can peak at $2,100 per share, but I'm looking for it to be around $1,600 as my base case. That's the price I have in my financial model that you guys can download for free below. Thanks for watching. Let me know what your thoughts are on Tesla and what your goals for a number of shares in your portfolio are for this year. I appreciate you joining the family, and I'll see you guys in the next video.